Hey everybody, welcome back to another video. It's been a tough 2 weeks, market's down over 10%. However, here's my recovery play. Now before we get into it, everybody clap it up. We got 110 subscribers and 7 months of YouTubing. I have to say I am genuinely thankful for everyone who subscribed and everyone who's watched my videos. I appreciate you, and let's get that number up to 200. Anyways, back to the plan. Now in this video, I'm going to talk about what to look at and what to focus on this week, and my strategy going into the coming few weeks of the market recovering or, selling off. Now let's talk about what to focus on this week. Now this is a US economic calendar. There really isn't much events to focus on. One economic report that I would put some emphasis on is the unemployment rate. However, other than that, I believe most of these are pretty irrelevant. However, what you should focus on is going to be earnings. This week's earnings is going to be absolutely wild. Monday isn't such a big deal. However, Tuesday we have some pretty big companies and pretty big names. We got UPS, we got Google, we got General Motors, Starbucks, AMD, PayPal, EA and Guild, and Match as well. Wednesday, ABC, AbbVie. AbbVie's a really good dividend stock. We got T-Mobile, Qcom, Qualcomm, Facebook. Thursday, we got Honeywell, we got Shell, we got Amazon, that's going to be a big one, Ford, Snapchat, Pinterest, AbbVie, and Friday, we got, Bristol Myers, that's a pretty big one, and Royal Caribbean Cruises, that's also another popular name. See, this week's earnings is going to be absolutely wild. And here's why I do believe that this week will most likely be where the market reverses. Now let's go to the charts real quick. Now this is the SPY. And if we look at the SPY, what we'll notice is that when we had a sell-off, essentially, we got rejected by the 15 moving exponential average. We got, every time we retrace back to the EMA, we had a pretty big sell-off. However, right now, as you can see, we're pretty much on a sideways channel, or sideways price action. Now, what's more, the overall linear regression channel is overall trending up, and we're at the bottom of the channel. Right now, if you're into ETFs, the SPY, and especially the QQQs are wonderful investments. Now the reason I'm going to focus on earnings is because I think that if most of these, well-known companies beat out earnings, it's going to turn the market sentiment upside down to become bullish again. See, let's look at Apple. Apple was at the bottom of the channel, and after they reported earnings, which they absolutely blew away, they increased pretty much overnight. They increased 158 to 170, so almost like $10 or 10% in like 2 days. That's pretty phenomenal. And another example is Microsoft. Here, Microsoft has increased phenomenally. We sold all the way down to the 275s. They released earnings. We're back to 300s. That's also 10%. Now, if you follow the same strategy, like I pointed out in my last linear regression trend channel, you buy at the bottom of the linear regression channel, sell some of your position at the middle, and wait for the top. That is my general principle or general rule of swing trading with the linear regression channels. Now is a perfect time to trade this same setup. You know, we have some very, very good, well-known companies that are at their bottom channels. For example, this is Nvidia. You know, they sold off pretty rough. Through you know, the market sold off. Nvidia sold off. Many tech stocks, many well-known tech stocks sold off. You know, we got obviously I already said Apple. You know, Apple had a pretty big sell-off as well. If you guys capitalize on this, I have to congratulate you. I bought a couple shares over here before earnings. And speaking of buying before earnings, that's gonna be my first strategy. Now, Google is gonna release their earnings on Tuesday. Tuesday is when they'll release their earnings. Now, what we've been noticing in this volatile market is that when the company releases their earnings, they move. All right. And we saw this with Apple. You know, Apple, I already explained, they moved like 10% in a matter of like 2 days. Microsoft, same thing. Over here, you know, moved from 275s to all the way to this 308. That's almost 35 bucks, 35 bucks. Microsoft moved 10% in like 2 or 3 days. So what my strategy will likely be is I'm gonna pick a group of very well known companies that I believe have a very low chance of not beating earnings. Now, the two main ones for this week will most likely be Google and Amazon. You know, Google is, I'm sure everyone knows, one of the biggest search engines. They have their phone brand, they have the Play Store. They're essentially printing money. And I think that there's a very, very low chance of them not beating their earnings. As well as Amazon. See, Amazon, you know, they're one of the most intricate and largest logistics company in the world. You know, they ship out products, and they're one of the most complex yet efficient companies in the world. You know, they have their cloud software, which is also a money printer, and they essentially dominate in pretty much any business that they come into. You know, they have the largest online retail platform, and you know, they're one of the biggest companies and one of the greatest companies this world has seen. So I think it's very unlikely for them to lose their earnings. However, with that being said, you need to assess the risk. You know, earnings are like a double-edged sword. One of the best examples is Netflix. I'm sure everyone has seen it already. See, Netflix, they beat out their revenue and they did generally good in their earnings. However, there was one metric, their subscriber growth, that they lacked on, which caused a 20% sell-off in Netflix. And that's the double-edged sword of trying to trade earnings. It can be very volatile time. However, at the same time, if the company does not perform well, there will be pretty big sell-offs. So if you're gonna do these types of play, I would recommend that you go half your position or even a quarter of your position and then scale in after you get confirmation that they did beat their earnings out and they start increasing. So that's going to be my first strategy. Will likely be Google and Amazon. Some notable companies that are releasing their earnings on Tuesday will be AMD and PayPal. However, I'm not so confident in AMD just because of supply chain issues. I'm sure that AMD will take a hit from the supply chain issues that we have right now. And Starbucks, while I while it's one of the biggest, cafes in America, I'm not too confident that, with the COVID cases increasing with the Omicron version, I'm not really too confident with Starbucks earning. And PayPal, I'm sure that they're a good company, and they pretty much print money every transaction they make. However, if we look at the chart looks disgusting. I mean, it's an overall negative linear channel. We're making lower lows, and we're not. I don't think it's a really good. You trade with the trend. That's how you. It's just easier to trade with the trend. And right now, PayPal's trend is pretty horrendous. It's bearish, and I'm not too confident that they can reverse. On the other hand, I talked about this in the other video. I took a trade in Visa, and that worked out pretty well. However, even right now, for some reason, these payment providers have been taking a pretty big hit, and the linear regression has turned negative for most of them. Like, for example, MasterCard is a negative linear regression channel, Visa negative regression channel, and of course PayPal negative channel. I'm not too confident in a reversal from them. If they do pop up from amazing earnings, I'm glad. However, that's just not going to be one of my main plays. Again, looking at Wednesday, Qualcomm is out of the picture. I don't really know much about these other companies. I know AbbVie is a good dividend stock. ABC, again, I'm not really too sure about that. T-Mobile already traded, and it's a pretty negative linear regression channel. So if we go over here, it's a negative regression channel, so I won't really touch those. And of course, Facebook is a pretty big one. I think that Facebook is definitely on the table with me. However, we are just slightly in the negative regression channel. The general rules for the earnings play is first going to be just the general chart has to look good. So this means that the linear regression channel has to be increasing. So as for Facebook, it's not really increasing. You would want something like, let's say, NVIDIA, where we have an overall increasing channel. You need to be confident that the company is going to have a good shot of killing earnings. So for example, NVIDIA, we have supply chain issues, so they're probably going to take a hit from that. However, like Google and Amazon, because because COVID has been spiking up and many people are staying home, they have a better chance of increasing their revenue, especially Amazon with their online shipping. Now, our second strategy is going to be the market recovery play. Essentially, this is on the hypothesis that the overall market is in for a reversal. Now, why do I think that the market is going to reverse? Now, the market dipped because the Fed discussed increasing interest rates. However, the thing is, the increase in interest rates have been priced in for a long time now. Ever since last year, there have been, talks of, hey, the interest rates are too low right now, and it's likely going to increase in the future. The interest rate spikes have already been priced in. The market anticipated it, and it has already formed itself in a way in order to account for the interest rates. However, what's not priced in, and the reason the market crashed, was likely the timing was wrong. I believe that the market crashed because most investors didn't expect the Fed to come in so early as they did this year. January, right away, they came out, I think last Wednesday, and talked about increasing rates. I believe that's what caused the market to crash. Or, sorry, not crash, dip. However, if we see right now, we had a very bearish move down, and we came to the bottom of the linear regression. Now we're kind of having sideways movement. See, I believe this is where the market is anticipating, or rather adjusting itself to account or price in the interest rate spike time frame. I believe that this consolidation is the market adjusting itself to account for the interest rate hike timeline. And so with that being said, I do think that the market will recover to the 470s. We're at the bottom of the channel. This is the perfect setup. Last week, the markets were overall bearish. However, with Apple and Microsoft killing their earnings, so right here, Apple absolutely broke records with their earnings, and Microsoft also beating earnings, even though, we have supply chain issues, even though COVID cases are going up, even though, inflation is through the roof. These companies beat earnings. And I think that because, Microsoft and Apple had such strong earnings, the market is starting to change sentiment. And I think that this week is pretty pivotal for market. If stocks such as Amazon, Google, AMD, Nvidia, and all these blue chip tech stocks do perform well for their Q4 earnings, it's going to change the sentiment of the market. Because, hey, we have these issues. We have supply chain, we have COVID cases, we have, inflation. However, these companies are still beating, their earnings, or doing well for their earnings. And because of that, I think that if these companies do kill their earnings, the market will reverse. And when the market reverses, most good stocks do follow the market. Let's look at Tesla. Tesla, they did pretty good in their earnings. However, their guidance wasn't that great. What I mean by guidance is that they talked about how supply chain has led to them, slowing down on their growth, and how supply chain could be a problem in their future growth. And of course, the stock tanked because, hey, if the future prospects of a growth company aren't that great, well, investors wouldn't really like it. However, I think that if the market does recover, stocks like Tesla, where, they didn't have an overreaction such as Netflix, where, Netflix, they, missed in one aspects of their earning and they crashed 20%. Stocks where, they did pretty good in their earnings, but just didn't have good guidance, or it wasn't, too strong. I think these types of stocks will recover with the market. And so if you're gonna try and go for recovery plays, what I would do is I would try and pick the best companies that you think will have a viable future, that follow the general linear regression channel pattern. We have an increasing trend, we're at the bottom of the channel, and you wait for confirmation. Confirmation in this case can come in many forms. So for example, if you're gonna buy Tesla, you can go the original route of waiting for the EMA to start curving up and the overall stock to make higher highs, or you could wait for confirmation on the actual ETF. Once the SPY breaks out of this sideways market, you could start acquiring you could acquire cheap, solid companies at their lows, sell them at their middle, right? And that's how you can play this. That's how you can play this as a recovery play. And I have to say, there's a lot of fear in the markets right now. A lot of retail investors are looking at this in panic. However, you have to understand this: whenever there's panic, there's an opportunity at hand. Last year we had one major, I guess, dip, right? We had one major dip at the beginning. We had like a 3% dip, from this to here. Or sorry, we had like a 6% dip, and that obviously returned back to all-time highs at like 5%. I think that this is right now is a pretty good opportunity to acquire these stocks at a very cheap price, and the price action is explaining, or at least to me, seems like we're in for a reversal. If this week's earnings report is phenomenal, if Google, Amazon, AMD, if they crush their earnings, I think the sentiment will change. And if the sentiment does change, we're in for a pretty good recovery play. Anyways, thank you for watching, and have a good one.